Welcome back to The Price of Business. I'm your host, Kevin Price, talking to you about you and your business. Brian Gordon is a regular on the program. I get great feedback, by the way, Brian, whenever we have you on the show, because people are very concerned when it comes to long-term care and health-related issues. I've read recently 7 out of 10 Americans are going to need long-term care. It and disability insurance are about the only two things that you're pretty much guaranteed. Chances are 7 out of 10 you're going to need one or both. And so, yet, it's one of those things that are still pretty neglected. It's not something automatically chosen by people. And so I'm really glad that we have you and MAGA LTC, that's MAGALTC.com, to help us navigate through these issues. Welcome.
Thanks, Kevin.
Good stuff. Brian, talk a little bit about, what happens when you don't have long-term care, but you are in a situation where it's obviously needed.
Well, what ends up happening a lot of times, a lot of families and a lot of people who go through this problem are usually reacting to the problem. They don't really think about it very much. So what winds up happening a lot of times is that either the person that needs the care will either use their own money, spend on their assets for home health care services and or nursing facility services or assisted living. And then what winds up happening a lot of times, either in some cases the kids will step up if they're at home. Some of the kids will pool together and help pay for their parents' care so they don't have to move into an institution type of a setting to go under Medicaid at that time. And you have a lot of situations today where I'm seeing a lot of kids that are paying for their parents' care, and they're paying anywhere from, families I talk to, anywhere from about $40,000 a year to one of the largest families I deal with that they pay close to $180,000 per year for their parents.
Yeah. So it's extraordinary. A lot of times what ends up happening is that people who are, mature, the last thing they want to do is lose control. They're already losing body control often as they age. They don't want to lose control over their finances and those type of things. But essentially they have to make themselves broke in order to get government to get involved into long-term care. And the quality of that care is really different than if they had long-term care insurance. Isn't that true?
In some cases, it can be. We fortunately, when talking to families who have been through the Medicaid system, we have dealt with families who have had good experiences with it. Because what has happened, again, that is really appropriate for some people that not to have insurance, because if their asset levels are minimal, and to buy a long-term care policy is going to really affect their budget and affect their lifestyle, and that's something that they don't really look into for themselves. So what a lot of families will do, what we recommend, is to try to find good Medicaid facilities that they can go into as a private pay patient for a certain amount of years or a certain amount of months, and then when their funds run out, they then can go on to Medicaid and stay in that same exact nursing facility, which they're already accustomed to, and they're not having to disrupt their whole situation and things.
Yeah, very good. So it really comes down to being empowered versus being kind of a victim.
Right, and unfortunately, a lot of people don't think about this type of coverage until it's too late, and we're getting a lot of calls today from really people in their mid to late 40s to about their late 60s, early 70s, where they've already had an event or a health issue that would preclude them from buying the coverage. So the conversation about maybe spending on assets and going to Medicaid is something that they address earlier than later, because they know that that's a direction that they may have to take if the situation does come up.
Yeah, and the reality is, man, I don't know about you, Brian, but time really does go fast. And so, it seems like what used to be years, what used to be decades feels like years. In terms of the way time flies, and so there is no time like the present. And the reality is a risk, like all insurance, is a risk management game. And so the older you get, the higher the risk, therefore the higher the cost.
Correct.
It's really that simple.
It is that simple, and it's just something that what people need to do is just think about their situations and determine if this is something they should be looking at for themselves. And I think that a lot of people, they should be bringing up this subject with their own planners, if the planner has not addressed this topic for them, because let's face it, we all go through life trying to accumulate and have some money for retirement, And what we don't want to have happen is, having those retirement funds, go towards anything but paying for a retirement. A lot of families want to have that for their enjoyment, not paying for their care in the future.
So tell us a little bit about, what kind of people contact you. You mentioned some of the age groups that they're in, but how often do, children of adult parents, of parents find themselves in that uncomfortable position to feel like they need to make a call for their parents? Does that happen pretty often?
It does happen quite often. We deal with a diverse group of people where, they're seeing what their own friends are going through, and we have families that are looking to put together some plans to allow their parents to stay at home as opposed to them having them go into a facility. Right now I'm working with a couple down in Florida where they're in their early 70s, and someone was presenting a long-term care policy to them, and their son brought it to me, and we dialed in a little bit deeper into what their finances were, what their goals were, what they really wanted to do, and realized that this couple really had minimal amount of assets, and their income was just okay. And so what we did is we got the son and the daughter involved, and they are now looking at a policy that will allow their parents really the benefit to stay at home. And otherwise, if they had to spend out of their own pocket to stay at home, they would not have the assets to last that long. So we went ahead and redesigned the policy. They were showing that the parents some premium that was close to $8,000 a year. And once we realized what they were really looking for, we listened to what the family wanted. We were able to design a policy, right around $3,800 a year that the son and daughter are going to be paying for, and it gives the mom and dad some nice benefits to stay at home if they wanted to.
Yeah, I like that. And of course, any policies that can
do that. They could stay in a nursing facility too, but the family's goal is to use this insurance to pay for them at home.
Yeah, I like that. And obviously, that's actually very cost-effective in many cases, and more cost-effective than facilities in some cases. People would think it costs more because you have someone coming out, but not necessarily. And so,
right, well, it depends how many hours a day, and as time goes along, we found with our own family that it starts out needing a few hours a day of care, and then 2, 3, 4 years later, it requires 24-hour-a-day care. So it just starts out at lower levels and definitely ramps up to higher services as they go along.
Now, my understanding is probably most people don't even begin to play with this topic until their 40s, because most people pretend they're immortal until they're in their 40s. When do most people? What is the low age for people to start asking these questions?
Right now, we're seeing people roughly in their mid-40s, 44, 48 years old that are looking at it. Our average age of our client last year was right about 57 years old.
Really? Of a new client?
Yeah.
Of a new client. So what would they pay, a 57-year-old?
Depending on the kind of benefits they're looking at, anywhere from about, let's call it about $2,100 a year to about $4,000 a year, depending on the kind of benefits they design for themselves. And, of course, a person can go a little bit lower than that, and they, of course, can go ahead and build very, very extravagant type of policies as well.
A little over $100 a month, or a little up to a little more than $200 a month. Pretty reasonable.
Up to $300, right?
Yeah.
It would take a little bit.
Yeah, up to $300. Yeah, that's pretty reasonable. So, if you're in your mid-50s and you're going, well, if you're in relatively good health, there shouldn't be much of an uh-oh. And for, many of us, we can afford that amount of money. I think that's great.
Right, they spend that amount on their coffees in some months. This is something that could really cause a major financial concern to their families and their spouses, especially if there's two people at home. It really sends a tough message to the family, and what makes the other members of the family usually kick in and have to help out when you have two people, and one of them needs some care for themselves.
Brian Gordon, awesome as usual. MAGA, MAGALTC.com. That's MAGA, MAGALTC.com. Brian, thanks so much.
Thanks for having me.
Great insight and information. Very important for the listener. Take action when it comes to your long-term care. When we come back, we're going to have much more for you. Do want to remind you the show continues 24/7 at priceofbusiness.com, and this is The Price of Business.